Good morning, everyone, and welcome to our 11th annual Financial Executive Forum. Hard to believe it's been 11 years. I want to thank all of you for joining us today. It's great to see so many returning people as well as new friends joining us for the first time this year. My name is Grant Palmer, and I'm a partner with Cordia Resources by Cherry Bekaert, one of the sponsors for this series. As you'll see, we also have 4 other great sponsors who we will introduce shortly. We're all very excited to see such a great response with over 1,200 registrants for this series. We know and understand how valuable these high quality and relevant training events are to financial professionals managing corporate accounting and financial functions. Once again, we're providing this series in a fully virtual format and running it in 2-hour sessions every Thursday morning for the next 6 weeks. We found that this format works well for our collective clients and friends. You should also know that we have a great team from Cherry Bekaert running our virtual program today, but please bear with us should there be any technical issues. I also want to thank those of you that joined us last Thursday, along with our co-sponsors, for our pre-event happy hour at Fogo de Chao in Tysons Corner, Virginia. It was a great evening. It was great to see so many people really enjoying the opportunity to network in person with their FEF peers. Okay. Next slide. As you can see, we have 6 great programs for you in this year's series. If you fully attend all 6 events and you're a CPA, you can earn a total of 12 full CPE hours. Our series includes the following. Today, we have Sage, a returning FEF sponsor, and they'll present how AI is transforming accounting. Next week, October 9th, the Cherry Bekaert team will present CMMC Demystified and the GovCon CFO's Compliance Challenge. On October 16th, Jennifer Lewis will once again join us as our ethics instructor from the AI CPA's Business Learning Institute and will teach our Virginia ethics program. The 2-hour course is required by the Virginia Board of Accountancy. On October 23rd, Marcia McLennan, a returning sponsor to the FEF, will present Fiduciary Risk, Responsibility, and Opportunity, Implications for Health and Retirement. On October 30th, the Wells Fargo banking team, a longtime friend and sponsor of the FEF, will present their economic update and Let's Get Digital, banking automation with APIs and embedded finance. And finally, on November 6th, the Cordia Resources by Cherry Bekaert team will feature our CFO Roundtable, which will once again include an impressive group of CFOs. Next slide. Yep. Before we move forward, I'd like to cover our basic CPER rules. We saw it in the video beforehand, but a little follow-up here as well. In terms of NASBA compliance, our polling questions will appear throughout the webinar. You will need to answer 75% of the 8 polling questions to receive full CPE credit for each session. Since you'll be muted during the entire session, please use the Q&A feature to submit your questions to the panelists. Please use the chat feature to communicate any technical issues that you may have. After the program, please complete the session survey using the link that we will send to you in a post-event email. And your CPE certificates should be issued within 2 weeks, if not sooner, of this course. If you have any questions, please reach out to Cherry Bekaert Learning at cbhlearning@cbh.com. Now I'd like to give our great team of sponsors a quick chance to introduce themselves. First up is Steve Ursillo, a partner at Cherry Bekaert. Cherry Bekaert is a returning sponsor to this year's Financial Executive Forum. Steve, you're up.
Thank you, Grant, and welcome everybody. Good morning. Looking forward to such a great event. As Grant said, my name is Steve Ursillo. I'm a partner here at Cherry Bekaert. I'm one of the leaders in the information assurance and cybersecurity practice, which I'm sure, as Grant mentioned, we'll be hearing more about for next week. But I'm here to also introduce Cherry Bekaert as a firm. Cherry Bekaert is a top 20 firm, leading CPA and advisory firm serving an array of different types of industries nationwide. We have deep GovCon expertise, as you're all probably well aware. We practice in helping clients navigate federal contracts and unique compliance challenges along those areas. We have deep experience in regulatory compliance, guidance on FAR, DFAR, DCAA, and federal grant requirements, things like that. Obviously, the CMMC and cybersecurity aspects of our team in the information assurance and cybersecurity area is another area where we provide an array of services and support for the GovCon industry. The firm also gets involved in helping in our government contracting practice for cost and rate structuring assistance, as well as growth and transactions. So like I said, it's a real pleasure being here and looking forward to this great event. Thanks, Grant.
Thank you, Steve. Really appreciate that. Next is Allie Gregory, an employee health and benefits consultant at Marsh McLennan Agency, a returning sponsor, and we're very, very happy to have them as part of the Financial Executive Forum. Allie?
Great. Thanks, Grant. Good morning, everyone. As Grant said, my name is Allie Gregory, and I'm a consultant in our employee health and benefits practice at Marsh McLennan Agency, where we work to ensure that our clients have high-quality solutions and sound advice backed by experts, ranging from actuaries and underwriters to clinical nurses and health management consultants. Marsh McLennan Agency, or MMA, provides business insurance, employee health and benefits, retirement and wealth, and private client insurance solutions to organizations and individuals seeking limitless possibilities. With over 11,000 colleagues and 200 offices across the United States and Canada, MMA combines the personalized service model of a local consultant with the global resources and expertise of the world's leading professional services firm, Marsh McLennan. MMA's focus is primarily to support middle market clients across all industries and geographies. Our clients share similar profiles to your organizations, and we work closely with many financial executives to support your business goals. We look forward to seeing you on our session later this month, which will focus on fiduciary responsibilities of plan sponsors in employee health and benefits and retirement plans. Thanks so much, Grant.
Thank you, Allie. Really appreciate it. Now we have Ben Kane, Executive Director at Wells Fargo Bank. As I mentioned earlier, Wells Fargo is returning a longtime sponsor of the Financial Executive Forum. Ben, over to you.
Thanks, Grant. As Grant mentioned, Ben Kane, for those of you I don't know, I'm with Wells Fargo's commercial banking. I'm based here in DC, but we've got bankers all over the country supporting the Financial Executive Forum. So our locally based commercial banking teams, they support businesses in each one of our respective markets. And in my opinion, we play a super important role in supporting the heartbeat of the American economy, which is the businesses and people on this call. We've got a national reach, as I said, with local insights. We've got bankers like me embedded in all of the markets that are represented on this call. And whether that's working capital, treasury management, equipment finance, strategic advisory, our teams bring deep industry knowledge and expertise with a commitment to understanding each client's unique needs. In short, Wells Fargo is a commercial banking partner for each business of every shape and size. And we're proud to stand beside our clients as they shape the future of American commerce. And we're also super proud to be, I think, our 8th year doing the Financial Executive Forum. Thanks, Grant.
Thank you, Ben. And you got a shout out from Quincy Chu there. So we'll note that. So next up, I'd like to introduce Doug Smith, Managing Director with our Cordia Resources practice. As you may know, Cordia Resources is one of the original founders of this series. So Doug, over to you.
Thank you, Grant. And it's a real pleasure to be here with everyone. As Grant says, I remember when this event was literally 50 of our financial leaders in a hotel conference room. So it's wonderful to see well over 1,000 people joining us virtually. So nice to see so many wonderful clients, friends, and welcome to all the new folks if this is your first seminar. As Grant said, I'm Doug Smith, Managing Director at Cordia Resources by Cherry Beckert. I lead our temporary and senior interim practices. Cordia was founded by executive CFOs along with very tenured senior staffing and recruiting partners. I think we all thought back then that staffing and recruiting could be done better when combined the industry and knowledge expertise with a very senior finance and accounting recruiting team. And I must say, mission accomplished. We now service the Washington, D.C. metro market in addition to everyone across the country through our partnership with Cherry Beckert. We provide staffing services on the temporary, senior interim consulting basis, temp to hire, and permanent search. And we work in the areas of finance and accounting, HR, and IT. So whether you're planning for that special project here at year end, you unexpectedly lost a senior strategic employee, or you're just going through growth and expansion, the Cordia Resources by Cherry Beckert team, we are all here to help you find the right person at the right time. Thank you again, everybody, and have a great seminar.
Thanks, Doug. Really appreciate it. And finally, we have Gary Marr, Senior Channel Executive at Sage. Unfortunately, Gary was not able to join us today. We're going to pass it over. We're fortunate to have Aaron Harris here, who's also from Sage, who'll be the course leader this morning. But just to note that Sage is also a returning sponsor to this year's FEF, and we're very, very, very happy to have them as part of the FEF again this year. So next slide, please. Just a quick look at our agenda for the day. Okay, so there's just a quick agenda for what's the timing of the events. And now we can pass it over to Aaron. Aaron, I'd like to welcome you to the FEF and looking forward to your presentation. We talked about it earlier today. You were the last one in last year's session and the first one this year, kind of bookended us. So very happy to have you. And Chief Technology Officer, Aaron Harris with Sage, everybody. Thank you.
Great. Thank you very much. And thanks everybody for joining me this morning. I'm assuming that, can someone just confirm that you see the slides?
We do.
Great, great. So, as Grant mentioned, I'm Aaron Harris. I'm the Chief Technology Officer at Sage. If you're not familiar with Sage, we're a global provider of accounting, finance, people, payroll, manufacturing, construction management, a whole host of cloud-based back office software. My role as the CTO is to set the technology direction for the company. And since we are so focused on accountants in the accounting industry, the transformation of AI is where I spend the bulk of my time personally. Just a couple of other things about Sage. We're about 12,000 employees now, roughly $3 billion in revenue. The US is our largest market, and it's where the largest part of the business is. And if you are familiar with Sage, it's likely here in the US that you're familiar with Sage Intacct, which is our mid-market cloud accounting product. I started my career more years ago now than I care to admit as a co-founder of Intacct. And so this is what I've spent my adult life doing. So what I want to do today is take you through a really broad spectrum of how AI is transforming the accounting industry and the profession itself. And I want to start by sort of talking about how the mood is changing and shifting. So if you go back to 2024 and 2023, there was a lot of expectation. There was a lot of sort of energy around the hopefulness that AI would come and really transform work for the positive. There was also a fair amount of, I would say, anxiety. This Gizmodo headline here is one of my favorite tongue-in-cheek headlines ever. OpenAI saying the stonemasons should be perfectly fine in this brave new world. I think the article mentioned jackhammer operators, backhoe operators, carpenters, and plumbers. Really just underlining this anticipation that generative AI would be very, very disruptive. If you move forward to 2025, we've captured a couple of headlines here. I'm not sure about this first one about AI passing the Turing test. If you're not familiar with the Turing test, this goes back about 80 years. Alan Turing, a famous data scientist and innovator, came up with an approach to testing AI to see if we've actually arrived at artificial intelligence. And the idea was that the test could fool a human into believing they were interacting with a human. So, there's a lot of people now who claim we are past that test. There are some companies, Shopify being a great example, that are really trying to be ambitious about how they deploy AI within their companies to drive productivity. Shopify has sort of laid down a rule with their leadership that they're not allowed to grow their teams unless they prove they can't do the job with AI. I personally think that's a bit aggressive. I think all companies have a choice when it comes to productivity driven by AI. They can use that AI to drive, better margins, better productivity, or they can use AI to drive accelerated growth. And we're big believers at Sage that this is an opportunity for us to be more prolific with building products, to drive greater innovation, to serve customers better, and not necessarily to cut headcount and create bigger profit margins than we already have. One of the things that I guess we have a poll question here. So the question is, which of the following best describes your current view of AI in accounting? Should have some poll music here. And sorry, whoever's operating is going to have to tell me when the poll is finished. Yeah, there we go. Okay, so great. You've been listening. About 425 of you, 80% of those on the call think it's an aid to productivity. I think there's some realists who worry about the threat to traditional roles. I think that's kind of a loaded answer because it says traditional roles, and we'll talk about, I think, how roles are going to evolve and grow. And then there's a fair amount of you who are waiting to see what's going to happen. I was on a call with a journalist recently, and we were talking about the roles of CTOs in the world today and how it's both exciting and challenging. And the challenging part is that we're in such a period of uncertainty. The technology, especially AI, that's emerging now is incredibly exciting, but it's also moving so fast that it's difficult to see exactly how it's going to manifest and how it's going to disrupt. So I appreciate those of you who are sort of waiting to see what's going to happen. One thing that I do believe, however, with a lot of conviction, is that services organizations and accounting firms are going to become technology organizations. I think it's really interesting to see some of the headlines around where the Big Four have been investing. Deloitte throwing $3 billion into their generative AI programs, doing a couple of acquisitions. PwC the same. They become a reseller of OpenAI. They also are investing billions into developing their AI capabilities, and you can kind of see this consistent theme. And I think that this is a picture into the broader industry where I think firms of all sizes over time are going to adopt technology. They will become creators of technology, and they will start to differentiate their services to their customers through that technology. So all of this is in service to the evolving role of CFOs and finance leaders. So we at Sage, obviously, we do tons of surveys. We're constantly trying to stay on top of how the industry is moving, how roles are evolving. And the latest survey, it almost feels like we don't need to go out there and interview 1,700 finance leaders because this stuff's kind of obvious. But the surveys sort of support these hypotheses that seem obvious to us. 90% of CFOs have significantly increased their responsibilities. They are now taking responsibility not just for the traditional finance job, but also for driving profitable growth. I think CFOs have always been critical to strategic planning, but more and more now, the CFOs are leading the planning process. And I think it's not on this slide, but I think it's also noteworthy to see that increasingly CEOs are following the CFO path more than ever. I don't know what the number is in the US, but in the UK and across Europe, I think roughly 40% of CEOs came into the job from being a CFO before that. Right. So the role is really, really evolving. And I think expectations need to evolve with that. The expectations that CFOs and finance leaders have on their technology providers. We should really have a generational leap forward in how we operate and how we use technology to operate. So some transitions that I think are pretty provocative that we're going to deliver, right? So the old model of using menus and forms and reports and lists to navigate accounting software is going to more and more emerge to more natural ways of interacting, using natural language, asking questions, receiving information, driving a dialogue where you can do greater research and dig into underlying causes. I've been talking about this one forever, this notion that as an industry, we are totally shackled by these cycles like the monthly close, the annual audit, inventory counts, getting the invoices out on a weekly invoicing run, right? We've sort of put up this banner to say we want to get rid of the monthly close. Now, I say that to be incredibly provocative. I think most people who think about the evolution of the close really talk about a continuous close, where the idea is your information is always current, it's always reliable, and stakeholders always have access to the information they need to make decisions. That's fundamentally what we want to deliver through the continuous close. We want process. Oh, we've got another question here. So what's your biggest challenge today as a finance leader? Data quality and integration, talent shortage, compliance and regulation, or strategic decision-making? Okay, I'm expecting the answers to be quite a bit more spread now, and they are indeed. I actually like that 40% are calling out data quality and integration because that means you're focused on the prerequisites to bringing in, more capable technology and especially AI into your organizations. AI is only as capable as the data that it can access, and the sort of the level of integration across systems, right? So really like that so many of you are focused on that. The talent shortage is pervasive. Up until about a year ago, I would have said that it's even getting worse over time. Where there's hope is that we believe that some of the advances in the technology will create a more attractive career for the next generation of accountants, and that's starting to actually bear fruit. For the first time now, we're seeing more students, an increase in students who are choosing accounting as a career path. So that's a really hopeful change in that trend. Compliance and regulation are getting more complex, more pervasive, and the implications of making mistakes are getting more personal. So I appreciate that response. And then strategic decision making is really where we all want to be spending our time. Okay, so just a couple more on the transitions here. I love to talk about dashboards as being the state of the art with getting answers to information. But the problem with dashboards, despite how beautiful they are and how interactive they are, is you have to know what to ask, right? You've got to know what to measure. You have to decide how you want to visualize it so the insights are obvious, right? We need to transition from that to technology that seeks you out proactively with insights, right? We need to progress from that to a world where stakeholders don't have to come to you for questions and for insights. And I want to just getting back to the mood, talk about our newly appointed CFO at Sage. And it's kind of important to describe this young woman. As I said, we are a 12,000 employee company. We're actually the largest software company in the UK. We're part of the FTSE 50, which is kind of equivalent to the S&P 500. And there's a young woman who comes from Derry in Northern Ireland. So if any of you have watched Derry Girls on Netflix, that was her childhood. She's probably 33, 34 years old, and we've just appointed her to be the CFO of the entire group. This is an incredibly confident young woman. And we were having a meeting a couple of years ago where I brought in some data scientists to demonstrate the power of large language models. And as part of that demonstration, we showed how these large language models could answer sophisticated accounting questions like you would find on the CPA exam. And her reaction, this incredibly confident young woman, was, "Oh no, my job's going to be replaced by AI." And a very astute young man who's our chief commercial officer at Sage said, "No, you're not going to be replaced by AI. You'll be replaced by someone who uses AI better than you." And that's really the challenge, right, for all of us, and myself included. How can we leverage AI to do our jobs better? So we all have that aspiration. We all, this is proven time and time again by the surveys that we do. Finance leaders, everybody in the profession, they want to be more strategic. So we sort of look at this as a continuum where the traditional CFO, they lead a team that's focused on accurate, timely, compliant operations and reporting. They want to become a high-performance CFO that's a strategic leader that leverages real-time data. They drive financial insights and foresights to steer the business towards growth. But the reality is most CFOs are in, what we call the messy middle. They're really held back in that ambition because the work involved of being a traditional CFO doesn't stop. We still, as an industry, need to do a better job providing tools to get CFOs out of that work so they can focus on this more aspirational work. A couple of numbers for you from some of these polls that we do. 82% of CFOs say that their roles have significantly expanded over the last 5 years. Where is the role expanding specifically? So specifically, CFOs are doing more with M&A. They're doing more with corporate strategy. A lot of CFOs have taken accountability for environmental and social governance. But we're also seeing, because businesses are becoming digital, CFOs are taking on the mantle of driving digital transformation within the business. And I think this is a really important reason why we're seeing more CFOs get into that CEO job. So I'm a big fan of sort of interesting ways of measuring things that tell stories. So I thought, as a way of demonstrating how much the CFO's role has grown over the years, we could look at, well, how long have the annual reports for public companies, how much have they grown over the years? Because that must be an indication of how much work the CFOs are doing. So the answer is that over the last 5 years, the annual report of an average FTSE 100 company has grown by nearly 50%. And for the companies that are in the next tier of size, every year, the average growth in the annual report is about 6,100 words, right? So, that is I believe, direct correlation to how much more responsibility CFOs and finance leaders have. And as I mentioned, it's against a backdrop of challenges, and this was reflected in the poll that we just took you through. There are growing compliance requirements and associated penalties, right? It's getting personal. There's growing accountability for risk management and cybersecurity. We're dealing with a period of time where it's more difficult to predict what's going to happen in markets. Supply chains are not as resilient as they once were. We're still struggling with hybrid and remote work, and of course, we know about the looming retirement challenge we have, where 75% of CPAs are expected to retire in the next 10 to 15 years. Now, I mentioned that this is getting a little better, but we still have, as of about 6 months ago, 200,000 unfilled accounting and audit openings. So this is, I think, can be disheartening, can be really disheartening. Now, I was at an AI summit in France earlier this year. I think the only other notable American who was at this AI summit was JD Vance. He probably got a little bit more media attention than I did. I did get some media attention. I was listening to the president of France, Emmanuel Macron, speak. And we were talking about some of these challenges that we're going through. And I was doing my level best because I knew I might be on camera to show a very positive countenance through this. But if you look in the bottom right of this picture here, you can see that I failed miserably in demonstrating a hopeful face. I throw this in here because it's funny, but also, because this is what we all might be feeling like after having gone through what I just shared with you about the challenges facing CFOs and finance leaders and the industry in general. There is, however, hope, right? And the hope comes in the form of incredibly exciting advances in AI. And those advances are coming fast. So if you are in the industry, building AI, one of the things you pay attention to is a company called Hugging Face, which best name ever. Hugging Face is essentially the platform for data scientists and AI engineers to go collaborate with other data scientists and AI engineers to find models, to solve problems, to find data sets. And as of 2024, so the last time I gave a presentation like this, the number of models, this is again over from 2020 to 2024, right, had reached 10,000, was 10,000 in 2020, had grown to 190,000 in 2023. Today, there's over 500,000 models, right? So you can see this really, really accelerating growth. And I've had to actually adjust this slide for 2025. Those numbers have quadrupled just in the last year. So we're tracking over 2.1 million AI models on the site that are developed and trained by data scientists and AI engineers. And it's driving a massive wave of innovation. As I said, it's a really, really exciting time to be a CTO. So when we talk about AI, we talk about AI arriving in 3 waves. And those 3 waves are what we call the task-based wave. This is AI that is designed to do one thing and to do one thing very well. So the example is in Sage products, we have AI that can read an invoice, that can categorize an invoice, that can match an invoice to a purchase order. Each one of those tasks actually is composed of many small but highly tuned AI models, right? These are examples of task-based AI. With the introduction and the mainstreaming availability of large language models, we moved into generative AI, right? If you think about task-based AI, it had to be embedded within rigid workflows. It was very, very highly controlled. You couldn't interact with it, right? You have a simple input and a simple output, and that's it. With generative AI, we entered a world now where we can interact with AI. Right? We can now introduce new ways of interacting with technology, right? More conversational interfaces. But one of the biggest breakthroughs with generative AI are these models that can actually write code. They can develop plans, and that leads us into the world of agentic AI. So I want to take a minute and take you through what's happened just in the last year that has led us to this moment where we have now AI agents capable of handling complex workflows with little human supervision. So the first of those is that AI is still getting cheaper, right? This has been the rule of technology for as long as I've been a technologist, and it continues. If you look at, there's a reference sort of baseline of how expensive it is to build AI that is able to do to answer a battery of questions accurately. And that if you go back to GPT-3 in 2021, it was about $60 per million tokens to actually pass this battery of questions. If you fast forward now to the latest models, we're actually now to GPT-5, which is more than 2 trillion parameters, right? That cost is down to pennies per million, right? So we've seen more than 1,000-fold improvement in cost over the last 3 years. And the thing that I really want to emphasize here is that a large part of the cost and performance improvements have come through optimization, right? So, it's not just sort of scale economies. That has been a factor, but it's also optimization, meaning that these models require less energy, right? They're far more efficient in what they can do. The second is that we've been able to now give AI a proper memory. And the way that I like to describe it is if you go back to the first incantation of ChatGPT that was built on GPT-3, it was really interesting. It was like interacting with somebody who had memorized, the world's collection of encyclopedias, but that didn't have enough short-term memory to hold a phone number in their head, right? They were completely useless at moving from one task to another in a connected workflow. If you fast forward to the latest models today, that short-term memory now has become incredibly impressive, right? They can hold reams and reams of documents in their head while accessing these massive amounts of information. And so what that means is that they can retain the context required to move from task to task to task in the process of completing a larger, more sophisticated task. Another big breakthrough is that models have become multimodal. And so what we mean by multimodal is that they can work with and interact with different forms of media. So they can interact with documents and text, as well as interact with images or with audio or with office productivity documents and even video. And what this leads to is, when paired with that memory that I just described, the AI can work with far richer context than it could, right? If it needs to complete a workflow where at one step in the workflow, it needs to read a document, and another step in a workflow, it needs to listen to an audio recording of a call with a customer, it can do both of those things. And so lastly, and this is the truly magical thing to me, is that the latest large language models can reason. If you think about it in its most simple form, large language models essentially are just prediction algorithms. They predict the next word in a series. But we've advanced that so far now that reasoning models can break down a prompt into steps and can solve it, using multiple tasks, right? They can also access and competently use tools, right? So these reasoning models can invoke an API, to interact with a piece of software. They can interact with a database. They can interact with a voice API and initiate a phone call, right? I listened to a recording the other day of the very first case within Sage of an AI agent completing a marketing qualified lead, right? A prospective customer had a conversation with an AI agent, a very human-like conversation. Of course, we told the prospect that they were talking to AI. And, in a very complete conversation, the AI essentially marked this lead as now qualified and moved it onto the demo stage. It was incredible to listen to. So we can do far more human-like tasks now with these levels of models. And so this is what's leading us now to the agentic AI wave. And I'm sure that all of you on the call are hearing about this probably, so much that you're sick of it. It's one of those pieces of technology where everybody is sort of claiming that they own the definition, and they're trying to form that definition to fit their own purposes. I kind of like this headline from Andreessen Horowitz that says, and by the way, they're probably the biggest investor, maybe other than Lightspeed, maybe Excel, right? They're one of the top 3 to 5 investors in AI, right? And they're saying, hey, even VCs don't know what an AI agent really is. So it might be useful to look at how the big AI companies are describing AI agents or agentic AI. And I think these are all helpful and they're all accurate. So before I get into that, though, we do now have, I think, a polling question. And the question is, which of these AI breakthroughs do you think will have the biggest impact on accounting? Cheaper, faster models, long-term memory, multimodal capabilities, or reasoning and agentic workflows? Okay. I was expecting to see more distribution actually in the answers here. More than half of you were really convinced by my argument around reasoning and agentic workflows. I don't. I have a few slides to talk about this, but what I should also tell you is what's going to prevent us from getting there. And the biggest challenge for technology providers like Sage in delivering this level of agentic capability is building an experience where the humans trust the technology, right? Where there's this trusted relationship where somebody is willing to let go of a mission critical workflow to a technology that so they've got to feel. I'll talk about that a little bit more, but this is where a lot of the innovation has to happen now. It's like, how do we build the right experience? Okay, so getting to the definitions, OpenAI. They talk about the degree of agenticness, which essentially comes down to how adaptable the AI is to achieve complex goals in complex environments with limited direct supervision. I really like Anthropic's definitions here. So that's a much more sort of academic, no-nonsense organization. They just get into defining what a workflow is, right? Systems where large language models and tools are orchestrated through predefined code paths. Agents go beyond that, right? Where large language models can dynamically direct their own processes, how they use tools, how they maintain control, right? So they can more flexibly decide how to complete a task. And then, of course, NVIDIA, who is building the hardware that's powering all this technology. For them, agentic AI is simply using sophisticated reasoning and iterative planning to complete complex multi-step problems. For our purposes at Sage, we kind of break it down into three really simple statements that describe an agent, right? The first is AI agents don't require direction, right? So if you say to an AI agent, process this invoice, you don't need to tell it all the steps to do it. Navigate, in the product to this screen, fill out these required fields, make sure that you match the expenses to the right GL account, right? An agent can reason out how to do that without being told explicitly. Second, they can use tools and they can interact with other systems, right? So an AI agent should be able to navigate the software, should be able to do that data entry, should be able to, if necessary, initiate a conversation with somebody who they need to get more information from, right? And then what's really important to us is that by virtue of how these agents are developed, we can give them a brain in the form of a large language model that is very smart, very efficient, and very highly tuned to the world of accounting. Okay, so what I want to spend the bulk of the rest of my time with you on is painting a picture for how we can create a positive future for the accounting industry. And I need to, I guess, start off with a safe harbor statement here that in much of the work I do as a CTO out there evangelizing on behalf of Sage, I don't seek out marketing support. And I often eschew marketing supervision. I often don't let them review like the platitudes that I come up with or the memorable sayings. So I just want to get that out there that marketing didn't help me with this slide. But I wanted to come up with something that would be memorable that everybody could use to think about, what does the profession look like in the future? What will we be able to do with AI? Now, I know you're all full of anticipation for this memorable saying that I've come up with. So here it comes. With AI in the future, you will do more, you will do more smarter, and you'll do more different. Again, no marketing involved in this. I'm really, really proud of coming up with that. But as a framework, I actually find that it's really, really useful. So what does do more mean? It essentially means that we can solve the problem of the cycles, right? And you can't do more until we get you out of the business of doing these things, right? These are the cycles that you have to do. You cannot choose to not close the books because you've been asked to evaluate a potential acquisition, right? It's another simple way of saying it is that we can't move from the traditional CFO role to the high performance CFO role because the work of the traditional CFO is non-negotiable, right? This work has to be done. So the good news is that, we've got the technology to automate all of that, right? And this is where if I pull back from my job being a bit of a futurist and move forward, back to today, right? What are we doing today to make the life of a CFO better, right? It's responding to your requests, right? Your requirements. You want us to make AP and AR, more automated. You want to sort of get out of the repetitive work there. You want to simplify the compliance that and the workflow around compliance. You want technology that will help you to be more accurate with your forecasting, more timely with your forecasting. You want technology that's going to help you with risk management and that can support better strategic decision making. And the good news is, again, whereas I have to look towards a future that is aspirational, what I just described to you is 100% possible with the technology that we have today. So, polling question: which accounting task would you most like to automate with AI? And I'm going to take this back to our product managers and make sure that is on the roadmap. The month-end close, reconciliations, which trick question, that's part of the month-end close, expense management, or audit prep. And okay, so my whole mission of getting rid of the month-end close still lands with this audience. 40% of you want to get better at that. We've come a long way. I first told the world that I want to get rid of the month-end close about 7 years ago, maybe coming up on 8 years now. And I said it in a room with probably 5,000 people. Most of them were accountants or who were in the accounting industry. And it was crickets. There was a lot of confusion in the audience. And at the time, with the surveys that we would do of customers, we were finding that on average, it was taking 2 to 3 weeks for a medium-sized business to close their books. If you talk to those same customers today, they've gotten their closes down to 2 or 3 days. This is I would describe it as an asymptotic curve, right? You never quite get to the horizon, right? We're going to get closer and closer and closer until it's down to hours and then minutes. But it's now become something that people can grasp as a reality. And, I've gotten like 8 years out of this. I'm going to have to come up with something soon here, pretty soon. So I guess we have another polling question here. Do you believe 100% of standard accounting tasks can be automated by AI? Wow. I'm not going to try to influence your vote, but this is a test of how convincing I am. This is your speaker rating question, by the way. Okay, I've got some work to do. 10% of you are sold. 61% of you want to hear the rest of the arguments. 24% of you are really concerned about all the edge cases, and then there's a few of you who are unsure. So I have work to do to convince you. So let's keep working on that. So I mentioned my do more smarter, do more different. Let's talk about doing more smarter, right? How can we in the profession, provide better solution, provide better service, to do our jobs more intelligently? So there's a couple of components to do more smarter, right? So I break this down into 3 things, right? Do more in a more thorough way, what I mean, and I think I'm gonna go through, I'm gonna go through some examples of what I mean by more thorough. Do work with more intelligence. Again, I'll go through more example of how we can do the work of accounting and finance more intelligently, and then do more customized. And what I mean by that is do the work more tailored to the organization that you support. So what do I mean by more thorough? I mean that traditionally in accounting and finance, you're sort of restricted to working with highly structured numeric quantitative data, right? If you look at the work and only, in the world of audit, only samples at that, because there wasn't enough capacity to review everything, right? With technology, right, under the scope of being more thorough, we can look at all the data, right? We will reach a point where we don't have to rely on samples anymore. We can test everything. But it's not just that. We can analyze different types of data, right? So we don't have to be limited to that quantitative structured data. We can get into unstructured data, whether it's PDFs, emails, right? If so, think about how this might apply to better forecasting. Think about how it might apply to better risk management. We're able to go beyond spreadsheets, right? And then, widening the review scope, right? So we've got the capacity to go beyond a narrow set of data and content, right? We can reach beyond the walls of the organization, right? So, and I'll talk about, I don't know that this is going to be a really effective way of demonstrating this, but we came up with a couple of negative examples to show you the value of being more thorough. And so we went and researched a bunch of what I would call failed audits. And so an example of where being more thorough would have saved Hewlett Packard about $9 billion, right? If they had access to this technology, right, they may have discovered that autonomy had been cooking their books. They may have been able to look beyond just the ledgers and into more data, out beyond the subledgers, right? So think about this kind of in the inverse, right? If you had access to this technology, right, the accounting team could have saved Hewlett Packard $9 billion through this. I should probably come up with a better way and a more hopeful way of describing this, but it's got a price tag, so it's attractive to me. Okay, more intelligent. So what do we mean by that? Well, if you think about doing, forecasting, any sort of planning, we're kind of limited today to the models that we use for that. So, something that became popular a few years ago is Monte Carlo models, which require playing around with many variables that drive the results of something, and we just never had the technology to really use that at scale, right? So now we do have technology. We've got the power to run continuous modeling, with thousands and thousands of inputs and parameters and variables, right? We can play around with different types of sensitivities. So leading to more probabilistic insights and more confident decisions. Forecasts, right? We can build the models we use for forecasting with more complete sets of information. One of the things that we learned in our AI team at Sage, in building out AI for doing forecasting, what we learned is that there were definitely cases where we could develop AI that forecasted more accurately, but the real benefit was that you could forecast continually, right? That's the real benefit. So, if you're a subscription business and you want to do cash flow forecasting, the biggest input to your cash flow forecast is renewals on your subscription contracts. The problem is that in a business like that, it's so complex to do those renewal forecasts that finance teams could typically only do them once a quarter. We built models that could do this with largely the same degree of accuracy as the human, but they could be run continuously, right? So getting insight, at the time of business performance change that a forecast is now different is incredibly valuable. And of course, we talked about being able to include, non-structured data, non-quantitative data into your modeling, right? To get, perception information, brand information, what's happening in social. So again, getting to a bit of a negative example here. Imagine if Microsoft had technology that would enable them to look beyond the numbers with their acquisition of Nokia, right? So they had this belief that they could build a developer ecosystem around Nokia the way they had successfully built an ecosystem around their other products. But if they had had the technology that would enable them to really look out at the ecosystem around Nokia, they would have realized that that was going to be incredibly difficult to do. And in this case, it would have saved them, close to $8 billion. Okay, more personalized. We tend to think about best practices and benchmarking along the lines of industries. And over the years, we've been able to narrow that down to micro verticals, right? So within entertainment, for example, breaking down best practices into television production versus movie production. With technology we have available today, we should now be able to get that down so that it's tailored for specific businesses and specific organizations, right? So we should be able to train AI, not just on a large corpus of data that covers, a cohort of similar businesses. We can train it on a specific business, on their data that reflects the nuances in the way they operate, reflects their values and their mission. We should be able to, through the availability of cheap computing power, we should be able to continuously refine those models so that they never fall behind. They never sort of suffer from what we call model drift, where the predictions tend to drift away from a reality, right? So it's not only a matter of now being able to build AI on an organization by organization business, but it's also having the power to continuously train this AI so that it keeps up with the way business changes and adapts. So one more negative example for you. If we had this sort of technology, look at the acquisition of Skype by eBay. I don't know. I could have told you that this would go wrong. I mean, it seems really misguided to me that eBay sellers would suddenly choose to get on video calls with prospective buyers. Somebody was convinced that it was going to work, but perhaps if they had AI models that really understood the behavior of eBay sellers and eBay buyers, they may have realized that this was never going to work, right? And it could have saved them quite a hefty loss. Okay, do more different. And what I mean by do more different is rethinking the way we perform the work, right? The way we organize our teams, the way we design our processes, the way we train our people. And so we really break this down into what we want to do is we want to graduate from thinking about using AI to do the same work faster to using AI to do entirely new kinds of work, right? To doing work in very different ways. So unlocking new capabilities. So what sorts of capabilities could the finance team now provide for the business with this new technology? Evolved decision-making, right? So how do you serve the rest of the business in the way that they need to make decisions? So shifting from historical reporting to future shaping insights, for example, using AI to simulate the impact of pricing changes or supply chain disruptions or investment decisions. And of course, expanding the CFO's influence, not just providing financial insights, but providing operational insights that impact marketing, HR, sales, not just finance, really positioning the CFO as the orchestrator of the business strategy, backed by data. And how would you rethink the way you design your team if you were living in this world powered by this type of AI? I think you would rethink your core processes. You all want to either get rid of or move to a continual monthly close. You'd replace your manual forecasting with AI-driven forecasting. You'd serve the business with adaptive, continuous forecasts. You would leverage technology to automate internal controls and audits in real time. You can rethink your org chart. You can serve a bigger organization with a smaller team. What I would like to say, though, is that with a team the same size, right, you can provide far greater value and drive greater growth into the organization. And you can rethink the way you partner with the organization to deliver this, right? So the idea today of having the traditional business partner. So, I have a business partner on the finance team that I go to when I have a budget question, right? When I need to do some modeling about future expenses. Imagine deploying technology so that I can self-service on stuff like that. Okay, so we have a polling question. If you could rebuild your finance team from scratch, what would you prioritize? A smaller, more strategic team? Would you build AI co-pilots for analysts? Would you provide real-time insights for all departments? Would you fully automate compliance? I guess this is a priority question because the answer is you should do all of those things. But I guess it's a matter of which do you want to start with? I love it. Real-time insights for all departments. Yes, that is really, really aspirational. And it's exactly how we want to see finance teams evolving. And of course, everything else there is incredibly appropriate as well. So what I want to do now is talk to you about how we build AI at Sage. What are the principles that we follow? What's our vision that directs the way we make our investments and where we focus our innovation efforts? So kind of coming back to the three waves of AI that we talk about. Now getting into the agentic wave really now makes this vision we've had for years something that we can realistically achieve. And the vision is pretty straightforward. We've broken down our innovation strategy into three areas of investment. So the first is continuous accounting, where the objective is to capture and account for all business activity in real time. Continuous assurance, which pairs confidence with automation, right? It essentially says to you that having real-time data is no good if you can't trust that data, right? So we make equivalent investments in continuous assurance so that, as your access to information gets closer and closer to real time, you're not doubting the reliability of that data for decision-making. You're not distracted by concerns about compliance. You're not worried about whether your organization is operating within the controls you've designed, right? You're able to then, you're able to make decisions with confidence. Those two investments, free up time. They create that foundation, right? And they create space for us to invest in continuous insights. And I described this before. We want to move on from the world of dashboards. Dashboards are awesome. Don't get me wrong. If you sign up for a demo of Sage Intacct today, I guarantee you the first thing you're going to see is a dashboard that looks like your industry, that has the KPIs you care about, and it's beautiful, and you can drill down and you can play around with it to your heart's content. The problem, as I said, is that you have to decide what to measure. You have to decide how you want to visualize those measures so that the insights become obvious to you. And you actually have to remember to go to the dashboards, right? So the idea of continuous insights is you shouldn't have to identify where you want to pay attention, right? With AI, we should be able to pay attention to everything. We should be able to, because now we have real-time reliable information, we should be able to provide insights, as they emerge, whether it's a risk or an opportunity, such that you can make a decision within the window where a decision is possible. And that decision can be made confidently because you're equipped not only with a confident base of real-time information, but the technology is assisting you in making the right decision. This is the big beautiful vision we have for AI. And what's behind it is our principles. Now, what I mentioned is Sage is a pretty large company. We're about 12,000 employees. We have 4,000 developers in the company. We have a large central AI and data science team. We also have AI engineers and machine learning engineers throughout the product teams. But even at our size, we have to be, I think, really smart in how we make our investments. And so I want to take you through those. Right. So the first is focusing our raw research and development. So where are our PhD data scientists focused? They're focused on two things. They're focused on building and designing models that achieve levels of accuracy and performance that are required for accounting and finance, right? The bar is higher. The second area they're focused on is building trusted AI, right? So how do we build this whole world of trust around the way AI is embedded and used within products? We are very smart, I think, about how we partner with other AI developers like OpenAI and Anthropic and Google with the open source models and our own models that we develop, right? So we will always have the flexibility to use the right model for the job. So in some cases, we're using some of the Claude models and the Sonnet models. In some cases, we're using OpenAI models. In a lot of cases, we're using our own models. We're using open weight models. But there are two non-negotiables, right? The first non-negotiable is that the model has to meet the standards required for accounting and finance. And there is no space for any doubt around data privacy and data protection. After that, it's a matter of cost and performance, right? Because we want to build the most performant, cost-effective solution for our customers. We learned very, very early that in order to meet our objectives for high quality, real AI that works, that we had to build our own infrastructure for doing machine learning. And I'm going to talk about that in a minute. And then lastly, we wanted to build a consistent sort of comfortable experience with AI that worked the same wherever you were within a Sage product. And the result of wanting that consistent experience, a result of determining that we needed to build our own machine learning infrastructure, a result of this need for model flexibility is what we call the Sage AI Factory. So the Sage AI Factory is essentially a self-contained piece of technology that we can deploy either on a customer by customer basis, right? So we can give every customer their own Sage AI Factory. We can also deploy it globally, where we can use AI that learns from all customers to the benefit of all customers. And what the Sage AI Factory does is it sort of encapsulates the training, the deployment, the operations, and the ongoing continuous learning required to keep these models accurate. It's where we embed all of our trust commitments, right? So, it's where all the audit trails are. It's where we can provide evidence that we've followed our governance and controls. It's how we protect the models. So, how we defend our models. And what that does then is it creates a lot of confidence with our developers that they can build AI safely and not have disproportionate worries about the trust factor. And as I mentioned, we can deploy these factories on a customer by customer basis, but we also have the ability to deploy them to the network of connected customers and services. I'll give you a really simple example of why that matters. So when it comes to the AI that processes an invoice, you really have to do two things when you process an invoice. You've got to read all the data from the invoice. So you need to get the date, the amount, what were the line item products, what's the due date, what's the address that you send the payment to, okay? The way you read the invoice for a Home Depot or an AWS or UPS, right, you name it, the way you read that data off the invoice is exactly the same for every single customer. And so the more we can learn from every customer about how to read those invoices, the more accurate we can get in reading that. And so, we've got a patent that enables us to automatically graduate to vendor-specific models that are highly tuned for those vendors that get us to about 99% accuracy. But what they also do is they enable us to identify potential fraud, right? Where somebody purports to be Home Depot or purports to be McKesson or like name your big supplier. But because we know exactly what their invoices look like, right, we can identify when something's off. So it provides a lot of capabilities to us. However, on that invoice, when you go to actually classify it, right, categorize it, what are the expense accounts? What are the departments, locations, or other allocations? How does it have to move through the business to get the necessary approvals? There, you can't learn from everybody. You've got to tailor the AI on a customer by customer basis, right? So you have to build AI that can learn quickly and accurately for each customer because everybody is unique in how they manage the categorization of their expenses. So that's where the AI factory comes in. Another big investment for us is we learned that as incredibly capable today's large language models are, they still don't meet the requirements for accuracy, reliability, predictability, and performance that we need for accounting tasks. And so we've determined that we need to train our own large language models. So I'll give you a really simple example here. If you were to prompt a typical off-the-shelf large language model with a question, which stock items will I need to reorder soon? We want to know a couple of things when we get that prompt into our AI, right? This one's pretty clear, right? We're not going to let you ask questions about how to commit fraud, right? So we've got to get really good at that. Now, that sounds obvious, but actually, within the world of accounting and finance, there's a special vernacular, right? There are ways of communicating. And so in our ability to understand whether or not a question is toxic, we have to have much greater and sensitive ability to interpret questions. Is it a pleasantry? Specifically, is it an accounting question? Because we don't want to write jokes and Shakespearean sonnets, right? We only want our models to work on accounting and finance. And then getting into, are there any accounting terms? Well, take that word stock as an example. Without sufficient context, without sufficient prompting ahead of time, a large language model is probably going to fail to understand that stock means inventory, right? So we've created this battery of 350 accounting questions, and this is actually one of our patents. We've got a patent on training or testing large language models against a battery of accounting questions for accuracy. And essentially what we found is that when it comes to the easy questions, the off-the-shelf models are roughly as accurate as the models that we've been able to develop. But when you get to those more sophisticated questions, they start to fall down, right? So when you get to that prompt, which stock items will I need to reorder soon? An off-the-shelf model actually struggles to identify that stock is an accounting term, whereas the models that we've developed understand that stock means inventory. And the meaning of the term is that inventory is assets that are held to generate revenue and are classified as assets, right? So I'll give you another.
Aaron, I'm sorry, just a heads up in the Q&A, there's a few questions that have been popping up if you.
Oh yeah, so I can't see the Q&A. So do you want to ask me a few of those?
Sure. One of the questions is, with all these exciting possibilities, how do you suggest a small organization with limited resources get started on their AI journey?
So I think two things to get started. The first is there needs to be a mindset shift. And I like to talk about the mindset shift that I had to go through with AI. So if you go through the bulk of my career as a technology leader, whenever you're thinking about creating a solution to meet some customer requirement, there is always constraints in your mind about what is possible with technology today, right? And it becomes a bit of an artificial limiter to your approach to solving problems. And what I've had to do over the last 4 or 5 years is change my thinking, right? I've had to train myself to go into every solution that we want to create now with a mindset that actually there is technology available to solve this problem, right? So that's the first thing I would say, right? Change your mindset to say, there is technology that can solve this problem, and I'm not going to artificially limit myself to those problems that I'm confident that we can solve. The second, and I think this is really important, is to establish the right culture and set of values within your organization. And I think even small companies, with 10 or 15 employees, can do this. Write a one-page document to your employees that says, here's exactly how we want to use AI in our business, and here's the principles that we want you to follow when you're using AI. Be careful about data privacy, right? Don't put sensitive information into public AI models, as an example. So just get the basic governance in place. And then I would look for a quick win. Start with problems that are nagging you, that you just haven't been able to get to, that you can probably solve in a short period of time, ideally with something off the shelf, right? Where you're not having to sort of assemble a solution together, and just do it. Our experience with customers is that there's this initial reticence to bring AI in to solve a problem. But then once a team sees the results of that work and they're able to experience how their job changes for the positive, they become eager to bring in technology to solve that next problem. Sorry, I think that was a two-part question. I only answered one of them. Or did I answer both?
No, I think you got it there. Yep.
Okay, were there some other questions?
Maybe the next polling will give you one.
Okay, cool. So on this developing our own large language models, it's also, beyond just the accuracy, there needs to be predictable performance, right? It's not, I expect that those of you who use ChatGPT or Gemini or Claude regularly have experienced the intermittent outages, or the cases where it seems to think a lot longer than it should to answer something. We can't have that with accounting tasks. We need predictable performance. You've probably also experienced changing behavior and personality, right? The GPT models have they became very fawning, like wanting to please. They've pulled back a little bit and they become a bit more sterile. And that's because they're continuously tuning these models. Well, when it comes to the work of accounting and finance, we don't want fine tuning, continuously, unless it's to drive greater accuracy, right? We need to control how we train in a predictable way, right? So building our own large language models has enabled us not only to meet these the accuracy requirements, but also to meet the performance and the predictability requirements. Let's take a question. So you might ask this question to Sage Copilot, which is our conversational AI that we've launched into our products. Now, I suspect that you probably won't ask this question because you know what your revenue was last month. But let's just take this as an example. So if I put this question, what was my revenue last month, into ChatGPT? Now, to be clear, what I said to ChatGPT was, pretend that you're an agent. What steps would you take to answer the question, what was my revenue last month, in Sage Intacct? And ChatGPT then comes up with a plan. And if you are a a software developer that's experienced working with the Sage Intacct API, that's how you interact programmatically with Intacct. At first glance, this looks great. This looks exactly like our API. It includes fields that look like they're right. The problem is that if you look a little closer, there are things that just aren't true. It's saying to look at a revenue object. Well, there is no revenue object in Sage Intacct. It says to look at the recognition date on the revenue object. Well, the revenue object certainly doesn't exist. And so therefore, there is no recognition date. And then it goes to something completely different. It suggests looking at account balances from the general ledger, and it erroneously and illogically assumes that an account balance has a total revenue attribute, which makes absolutely no sense, right? It's kind of like using generative AI that creates images, and you get this image out of it that looks wonderful until you realize that the woman has 6 fingers, right? It's getting into the details. Well, details matter when it comes to accounting and finance. So we've had to build our own large language models. There's a number of things that we do here, right? So the first is we bring in a lot of additional content that you can't just get from scraping the internet into these models. We are training these models not just on the information, but also on the vernacular, right? The sort of the world of an accountant and their profession. We're training them on the compliance and the literature coming out of the professional bodies. We're training them to become experts at how our products work, so that when asked to perform, the step-by-step instructions to get the revenue, right, they know what object to go to, they know what fields to go to. And of course, we do this because we want greater control over the cost and the stability. And yeah, I mean, of course, we want to position ourselves as a global market leader. One of the things we're super proud of is we announced at our last user conference that we've partnered with CPA.com, which is the sort of the publishing arm of the AICPA, to train their literature into our models, right? So we can train these hyper accurate models that really understand the literature that accountants are trained on today. So before I move off this topic, there's one thing that I think is really important I want to leave you with. I think we are all rightly concerned about the energy requirements of AI. We've got this growing problem right now where AI demands are driving expectations around energy production that are literally changing the graph, if you will, right? You can predictably show on a graph how energy comes online in the US to meet energy requirements, and they've been roughly aligned, right? Very predictably so. We are now seeing a divergence where we know that energy demands are not going to be met by the production of new energy sources. So this is really, really important to us. So if you look at the models that we've developed to work on our products, these large language models, they are about 1/300th the size of the large language models that power Gemini and Claude and ChatGPT, right? And that is a direct correlation to their energy requirements, right? So they're 300 times smaller, meaning they use 300 times less energy. So we've been doing this for a long time. As I said, I told the world more than 7 years ago that we want to eliminate the close. So where are we at now with that? Well, we've got roughly 40,000 models that we've deployed. We're now processing billions of dollars a month of invoices purely with AI for our customers. We're doing billions of AI predictions annually. I don't need to read all of this to you. That 7 languages supported is really out of date. That's like 15 languages now. These are the areas of investment. So I talked at a high level, right? What's the vision? These are the very specific areas that we're invested in. So anomaly detection finding problems with transactions. This is kind of a annoyingly narrow one. Time tracking, so helping your professional services people to fill in their timesheets more accurately and timely. AP automation, general ledger coding, PO matching, right? You can read, and it gets, I think, more ambitious as you move through to automating the close and generating insights. And I think I need to speed up a bit to get done here, so I'll skip this one. I want to talk about how this could really power a more ambitious future that really is starting to arrive now. So we've launched Sage Copilot. We've got more than 40,000 customers using our Copilot, roughly 5,000 accountants in 5 countries. And I want to take you through just one capability that we think is really, really cool. So we've integrated Sage Copilot with Collaborate, right? This ability to interact with the finance team and the rest of the company in these accounting and finance workflows. And we've got about 500,000 users that are using our Collaborate capabilities. And so imagine now that AI is in there collaborating with you, right? And you can start conversations interactively with the insights that are developed, right? So in this case, our close and budget variance AI has detected and brought up a problem with variance, where a finance leader can actually now bring that to the attention of the budget owner. Really, really simple example. Okay, just skipping forward a bit. Lot going on with construction. Construction's a really exciting area to apply AI. We've got AI to help you to do more effective bidding if you're bidding on a project. But we also have AI that's more effective for GCs to understand who they should send bids out to and how they should analyze the bids that are coming in. We've got AI that matches drawings to plans so that you know that you're actually accurately building the right proposals. And then, of course, we've got AI-powered interactivity, right? Driving insights into the ongoing efforts of a construction project. Okay, agents are coming. What is our strategy with agents? 2 things. So first, we're going to use all of our experience. We're going to use the power of the domain-specific large language models that we've developed to build, the most capable, trusted agents for doing accounting and finance work. Simultaneously, we expect our customers to use their own agents. We expect that they will probably work with Microsoft Agent Factory or Salesforce's agents or Google, you name it. So we also want to make sure that if you bring your own agents to a Sage product, that we can create an environment for you where you can trust the work of that agent, right? So we're building out the governance, permissioning, auditing, observability. We're building what we call MCP servers that enable your agents to be more effective, right? So we're supporting both worlds. Where we are going to focus our efforts in building agents are probably not surprising to you. They go back to the slide that I showed you about, what CFOs are expecting. It's all about AP and AR, right? It's all about the close. It's all about supporting the rest of your organization with budget and variance analysis. With this world of agents now operating, I want to go back to that question. What was my revenue last month? A far better question than what was my revenue last month is actually a statement or a request to an agent, right? Not what was my revenue last month, right? That's the old CFO world, right? The new CFO world is, hey, watch my revenue forecast, right? And so if you imagine now that you're in Sage Intacct, you're looking at a dashboard, and you pick the revenue KPI from the dashboard, and you simply say, hey, watch this for me. You've demonstrated close to 10% growth annually. Let me know if something happens to change that revenue growth target. Right. So imagine, fast forward, that you've booked sales according to plan, right? So in most businesses, if your bookings are to plan, your revenue is going to be to plan very predictably, right? So there's no risk there. So I want you to imagine that. And then I'm going to give you, the shock and awe answer here, but not until you've answered this poll question. So the question is, would you trust an AI agent to make decisions in your AP/AR workflow? By the way, there's no right answer to this one. I'm genuinely curious to see where everybody's at. And I'll remind you that our belief is the biggest problem we've got to solve to enable agents is that trust question. Love it. Yes, with oversight, only for low-risk tasks, about a quarter of you. And a good chunk of you are waiting to I think, need more proof. Frankly, you're a bit more ambitious than I thought you would be, which really makes me happy. I think the industry's gone through a bit of a transformation. When ChatGPT arrived, I flew to New York City to sit down with the leadership of the AI CPA, and I wanted to look into the whites of their eyes to see how much fear was there. Because the first reaction was how disruptive and damaging this would be to some industries. And what I saw instead was opportunity. They were genuinely excited about the opportunity now with AI to really achieve their vision for the industry, right? That is operating at a much more strategic level than it has in the past. So I was really, really pleased with that interaction, and I continue to be pleased with how ambitious the industry is. So back to that question, right? Watch my revenue. Now imagine sales bookings are on track. So despite the fact that your sales bookings are on track, ChatGPT says, hey, your revenue forecast has changed. It's dropped from 9.6 to 8.9, which is a complete surprise to the CFO. So why is that? Well, what Sage Copilot is letting you know here is that while, yes, your bookings are to plan, your average contract value on your sales has dropped, which is expecting to lead to higher churn in the future, right? So you won't recognize this revenue drop immediately, but by the virtue of the characteristics of your customers changing, there's a prediction that churn's going to be higher, right? And so it's not just providing this insight that could otherwise be missed. It's also then helping the CFO to explore deeper into what's happening there. And of course, I showed you that the collaborate capability, right, and being able to pull somebody else into the conversation. Okay, for the rest of my time with you, I want to change gears to trust. So I want to share an experience I had with you. In the early days of COVID, we were all working from home. A lot of leaders at Sage started calling customers directly to check in. And I happened to call a small garden paving stone company outside of London, in the countryside. And this was literally a mom and pop shop. It was a husband and wife team. The husband ran the retail operations. The wife kept the books. And so I spoke to her, and in the course of that conversation, we got to bank reconciliation and her frustrations with bank reconciliation. And in the product that she was using, we have AI to automate that process. And so I said to her, are you using our AI-powered bank reconciliation? And she very matter-of-factly answered, without missing a beat, nope, I don't trust it. And when I really explored this with her, it wasn't that she was concerned about data privacy. It wasn't that she was concerned with, Sage as a developer and how we build AI, are we ethical? She wasn't even worried about whether or not it could do the job. Her worry was that bank reconciliation was so mission critical to their business that if she made a mistake, right, they may not be able to pay a vendor on time. They may miss payroll. And so even if she could hand the responsibility for the bank reconciliation off to AI, she still was accountable for the results. And so because it was so important to her, she was unwilling to give that responsibility to AI, right? And this is the bar that I believe we have to meet in developing AI, right? As finance and accounting professionals, you have to be willing to hand over responsibility for something that ultimately you're still accountable for, right? So when we break down trust at Sage, there's really three areas of trust that we focus on. The first is kind of the obvious one. It's developing safe, competent AI. The second is a matter of psychology, building the experience in such a way that the user knows that they're in control, right? And then lastly, ensuring that we are a company that our customers can trust. So in this world of developing safe and competent AI, the first rule is, well, don't use AI when traditional programming will work. I mean, really, really good example. It's very, very simple, right? The first rule of building accounting software is debits equal credits, right? No transaction can be posted where the debits and the credits don't equal. Now, somebody, some clever startup today that's getting a ton of funding because they're claiming to be AI first, might decide that a large language model can make that determination on whether or not debits equal credits in a transaction. Well, that's just stupid. It's so easy to code that into the system. It's so incredibly predictable to code it using traditional technology that I would never in a million years hand that off to AI. It just doesn't make sense, right? So that was a very simple example, but the principle applies everywhere, right? If you can accomplish something that requires an exacting, predictable answer, and you can do it with traditional programming, then do it with traditional programming. We build trust. Oh, we've got a polling question. Oh, this is a good one. What's your biggest concern about using AI in accounting? Is it data privacy? Is it the accuracy of the outputs? Is it concerns about regulatory compliance? Or is it that lack of explainability? Drum roll. Accuracy of outputs is the clear winner here. I do respect the other concerns. Data privacy is a real concern. You don't want to be in one of the headlines about your financial statements getting spit out from a ChatGPT model. So these are all, I think, legitimate for sure. So I mentioned how we build trust into the Sage AI Factory. I wanted to share just a little bit about some of the patents that we've been granted around trust. One of those is when you first use AI to complete a task, right, and that AI comes up with a plan, we don't then want that AI to every time come up with a plan once they come up with a plan that works, right? So one of our patents is around remembering and caching that plan so that we don't, have unpredictable outcomes in the future for something that AI already knows how to do. We've built really interesting systems for evaluating how well large language models operate at scale in the world of accounting and finance. And then we've got, and this, by the way, this isn't all the patents. There's just a few that I chose. We've got a really clever patent that does some reconciliation, right? So it basically, if we use AI to read all the values off of an invoice, we've got a system that can then look at sort of the world around that invoice and find hallucinations, right? So for example, it might come up with a total where there's actually no data on the invoice that matches that amount, right? So we have AI to check the work of the AI. UX design is absolutely imperative when it comes to the world of AI. And the way that I like to very simply explain this is for the bulk of my career, the objective in good user experience design was enabling users to be more productive, right? To work faster and more efficiently. That has to change, right? That has to shift, right? The objective has to move from one of productivity to confidence, right? If technology now is doing most of the work, right? Where most things are automated, good UX design needs to instill confidence, right? It's not anymore about making that human user productive. That human user is going to be doing many more things. It's going to be making more decisions, right? And that top level objective has to be confidence now. So we've got this, this new approach to trust that we've just launched, and it was the result of some surveys with customers. And what our customers told us was it's difficult to trust AI tools because we don't fully understand how they work or how secure they are. In other words, they're not transparent. They need to know, if I use this AI, is it legally compliant? Is it built in such a way that prioritizes accuracy and reliability? Is it explainable and transparent? Are you a principled organization in the way you build your AI? What are the steps you're taking to keep my data safe and secure? What are some of the external regulatory regimes that you're compliant with? And the result of this for us was what we call the AI trust label. So what we wanted was kind of something like a nutrition label, where if a customer was confronted with the option to use an AI capability, they could pull up a trust label. They would explain to them, well, here's the ingredients, right? Here's the models that are in this, whether we built them or the third-party models. Here's how your data is used or not. Here's how we test it to make sure that it works. Here's the controls we follow to make sure your data is secure. And here's any sort of compliance that we've achieved in the development of this, right? It's all about solving that transparency requirement. And the AI has to be explainable, right? There's this whole process around developing explainable AI. And the way that I would describe it is an experience I had early on with our Sage accounting team. This is a product for small businesses. It was the very first Sage Copilot that we developed. And in playing around with it, I asked it, what's my cash balance? And it very quickly came back with an answer, your cash balance is 0, period. Which A, I knew wasn't true, and B, well, that's not a super helpful question, right? So I went back to the designers to really dig into this experience. And what I discovered was that actually the answer was correct, because the interpretation of the question was about petty cash. It wasn't about the balance in my accounts. And so that led us to creating a very different experience where the answer would be, well, your cash balance is 0, but you may have been asking, what's the balance in your accounts? If that's what you were asking, here's a table showing your accounts and their balances, and you can drill into these, right? A very, very different experience. Okay, so what I want to leave you with is this sort of most important concept. When we do the research on trust and AI, there are 2 headline outcomes for that, right? The first is that trust is the biggest barrier to adopting AI. And the second is that a business determines the trustworthiness of the AI based on the company behind it, right? Based on the brand behind it. So I started my career in Silicon Valley. I grew up in this fast-paced world of startups, right? That's where we started Intact. And the mantra of Silicon Valley, 10, 15 years ago, and still in a lot of places in the Valley, Mark Zuckerberg is famous for this mantra at Facebook, right? Move fast and break things. I mean, that's exciting, right? It's pioneering. It's like we're going to be fearless in the way we go out and we build technology. The problem is that doesn't work in accounting and finance, and it certainly doesn't work with AI in accounting and finance. And I think large technology companies have to accept some responsibility that the impact we have on the world is far greater than it's ever been. And so I believe we have to replace move fast and break things with something that's less memorable and less exciting, but more appropriate. Embrace humility and accept responsibility. And if you want to go learn about all the principles that drive the way we develop AI, how we, the commitments that we follow. You can go to our AI Trust Hub, where I knew the camera was going to be on me. And so I knew to be smiling throughout and not have my grumpy face. And that's it. I hope you enjoyed it. Hope it was educational. It was a lot. I think we have a little time for questions.
Aaron, this is awesome. Just really, really appreciate it. And for going 2 hours strong, just great. Yeah, get a cup of coffee there and loosen the vocal cords, so to speak. Just a question here. I think this is a practical, general question, and it says, for young accountants and CPAs just starting their careers, what should they focus on as far as education and experience?
Well, I think every accountant in this coming generation needs to be, have good data analysis capabilities. You've got to be fluent in technology. I like to say that you don't need to be a data scientist or an AI engineer, but you should have a basic understanding of how AI works. What are the applications of AI? I think you have to have a mindset of embracing technology and constantly asking yourself, could I use AI to do this job better than I have in the past? I did this with myself. So I have a weekly to-do list. I've been doing this my whole career. And at the top of my to-do list, I've got a bunch of personal development things, right? So for example, in my to-do list, I remind myself when I'm giving a speech to not look at my feet, right? And to right, look at which I probably had my head down whenever I was thinking. So I'm still working on that. One of the things I have in my, personal development, I have this question: can I do it with AI? Right? I'm trying to constantly remind myself, right? In all the things that I have to do as a senior executive, writing a job description, looking for an opportunity to enter a new market. To what degree can I use AI to help me with that? So, I think that mindset shift is super, super important.
No, that's great. And I think we're up against the time. I appreciate it, Aaron. We all appreciate it for you and Sage making this such an interesting and valuable and very entertaining learning experience. And it's 2 great sessions back to back, and we really appreciate you kicking it off for us this year. For everyone attending, we know your time is valuable, and we truly appreciate you spending your morning with us. And we also want to thank our exceptional marketing team from Cherry Bekaert, including Leah Gearhart and Eunice Arias, for preparing and running today's event. A lot of activity behind the scenes, and we really, really, really appreciate it. Our next event will be CMMC Demystified and the GovCon CFO's Compliance Challenge with Tracy Sheps, a partner of Cherry Bekaert. So please make sure you log in early for that one. And finally, I'd like to thank all of our sponsors, especially Sage and Aaron, absolutely, for a great presentation today. Really enjoyed it. So thank you, everybody, and we look forward to seeing you again next Thursday morning. Thank you.